All right, good afternoon, traders. This is your free daily update from Seasonal Swing Trader. Today is April 11th, 2019. Today we're taking a look at the meat markets, live cattle, and lean hogs. First one up here is June live cattle, ticker symbol LEM9, LEM9 for June live cattle. And what we have developing here is a high probability technical pattern called the head and shoulders top. It's also coinciding with another one of my favorite patterns, the 1, 2, 3 top pattern. So here the 3S code indicator has already drawn out the 1, 2, 3 pattern as indicated by the 1, the 2, and the 3. Once price broke below the number 2 low, we get our stop, entry, and profit objectives drawn automatically on the chart for us. This would be the initial stop. This is the breakout level. This is the initial target, and then this is target 2. Now for the head and shoulders top pattern, we have a left shoulder down to the neckline, neckline up to the head, head down to the neckline, neckline up to the right shoulder. So this is the neckline here. We have a left shoulder, head, right shoulder, and then the neckline. And to measure the profit objective, we simply measure from the top of the head down to the neckline, and then we project that distance from the neckline down, and you can see it takes us down to about the 113 to 112 half level. That also coincides perfectly with the 1, 2, 3 top pattern objective, which is the distance between the number 1 and the number 2 point. Number 1, number 2 point is the distance between this high of 125 and this number 2 low of 118.70, and you take that difference below the number 2 and gives us our first profit objective right here again at the 113 to 112 half area. Now that distance is 125 to 118 half, and we can do 125 minus 118 half is 6.5 points, and each full point in the cattle market is $400 a contract. So we take 6.5 and we multiply it times 400. So we're looking for roughly a $2,500 to $2,600 move. So we're watching this closely if and when we get a break and close below the neckline, which is also be a subsequent close below the number 2 point. We're going to buy at the money put options with a projected move down to the 113 level. Now seasonally, cattle is supposed to top in around mid-March and actually bottoms around the 1st of May. So we're already approaching mid-April. So if and when this break occurs, we have a short window of time to try to capture a downside move before we find that seasonal bottom heading into May. Now we'll quickly go over to the hog market. We'll look at June hogs, HEM 19, and you can see we've had just an explosive move, limit up moves off of the daily chart in hogs due to the swine outbreak, flooding, etc. But from a technical standpoint, we look like we may be starting to get a little overcooked. Now this is a market that I would not short outright in the futures because of the explosive limit up moves that could occur, especially with the fundamental news related to this swine outbreak. But a low risk way to participate in a move, if you think it's going to come back down to earth, is via put options. And today I went into the option market in the July hog contract and I purchased some puts. You can see right here at the 86 level, there's a volume of 7 contracts traded at the 86 mark. 2 of those are mine. Purchased 2 put options at 262 half. The July 86 puts. You can see I'm up about $115 right now just on the 2 contracts, and I'm looking for pullback to the mean at some point as I think the news will eventually subside. If I'm wrong, I'm going to risk about 50% of the premium paid for the contract, and we'll move to the next favorable technical setup. Trade well, and we'll see you on the next update.